Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, welcome back to the show.
Jim, happy to be back.
John, Great Bear Resources was trading as high as $9.45, but McEwen Mining blew out all of its stock position last week. What's going on there?
Well, Jim, Great Bear right now is on a really big roll. Last week was a very big week at the Metals Investor Forum where I was this Friday and Saturday. It was the big star. But to really explain this story, I got to do a little bit of background on Great Bear. I know we've talked about it in the past on Discovery Watch. In late 2015, Great Bear optioned the Dixie project, and that is south of the Red Lake District, and it got it from Newmont on pretty easy terms, about $210,000 and a bit of stock. It was done in two stages, first 67%, and then they wrapped up the remainder in 2017. And what they wanted to do was focus on the Dixie Limb Zone. Now, there had been almost 200 holes drilled into this zone of mineralization. It clearly wasn't worth developing. It just wasn't worth Newmont keeping it. But Great Bear's team, headed by Bob Singh, they said, let's think about this thing. Let's see if we have another Red Lake District scale system down in this area to the south. And Red Lake, of course, has a 30 million ounce endowment, most of it high grade. So nothing really happened until they started drilling in August, and that's when they hit the hinge zone. Now, most of the earlier drilling was on the Dixie Limb Zone itself, and market yawned. The stock was 20, 25, 50 cents, just sort of sat there. But this was something different. They got 1 to 7 ounce per ton gold grades over pretty good intervals, and the stock woke up. And it was the same sort of ultramafic rock type as hosts the Red Lake District Zone. And it was different from the Dixie Limb itself because it was an intersection of D1 and D2 folds, which creates sort of the perfect environment for a lot of gold to get hung up in these zones. Well, Rob McEwen, he took all of one day to decide that he wanted to be part of this, because of course he was made by Goldcorp's discovery or reinvention of the whole Red Lake district back in the late 90s, when they found the high grade zones there that had been hidden deep within that system that everybody thought was pretty much depleted. So the company did a $10 million financing at $1.45. And Rob McEwen and McEwen Mining took $6 million of that, with Rob taking $4.8 million and $1.2 million being taken by McEwen Mining. And you ask yourself, okay, why did this public company need to be part of that? And there isn't any obvious answer, but I suspect it had something to do with, fiduciary duty. Rob probably didn't want to get sued because he jumped on this all by himself, and of course his pockets are much deeper than McEwen Mining, of which he is the largest shareholder. So McEwen Mining participated probably for sort of legal, technical reasons at the time. Now, what the stock was doing pretty good based on drilling of the hinge zone, but many people thought, especially those with experience with the Red Lake District, so they said, okay, it's very nice. They have something there. The company plans on marching along the South Limb Zone, but there they get away from these intersection of these different folds, so it's probably not going to be as great. And the hinge zone itself just isn't going to have the sort of endowment that Red Lake has itself. But Bob Singh's team was doing a lot more thinking about that general region. They ended up extending the whole Dixie project to cover 22 kilometers of what they interpret as a crustal scale fault, one that goes down quite deep, capable of bringing up fluids. And they inferred it from some various geophysics done by past parties. And it's very different from what the the hinge zone and the Dixie limb zone is all about, because those are south of this northwest east-west fault. And they surmised that based on sort of sporadic work done by others in the past who didn't really understand that the structural component of the LP fault, they said this is something very important. So in the middle of this year, they expanded what was started off as a 30,000 meter program. It became 60,000 and eventually 90,000. They managed to raise about $6 million at 540 or $10.9 million at 545 flow through a couple of brokerage firms in June. So they beefed up their treasury very well because they had started to confirm a hypothesis that is now something completely different from what got Rob McEwen all excited about the hinge zone back in August of last year. And that is that they're dealing with something similar to the Destor-Porcupine break or the Cadillac Larder break. The Destor-Porcupine hosts the Timmins district, and the Cadillac Larder hosts the Val-d'Or, the Malartic, and also the Kirkland Lake districts. And these are veins that go very deep, gold zones that go quite deep, and they're hosted more in sort of a package of sediments and volcanics, and then these green, what's part of the whole greenstone belt, the Abitibi greenstone belt. Except this is way off in northwestern Ontario, south of the Red Lake district. And last week they put out some more batch of results, but in addition to sort of showing that they now have several of these high-grade zones where you do get the visible gold with high grades over short intervals within a broader envelope of lower-grade disseminated mineralization. This is all occurring to the north of this fault within this package of sediments and volcanics that are very different from what hosts the Dixie limb and the Dixie hinge zone. And the market got very excited last week. McEwen Mining, which bought about 750,000 units back in August a year again, started selling around $3-4 in August. But last week when the stock broke $6, they blew out the rest of their 500,000 shares for a total payoff of about $6 million. So that's about $4.8 million profit. Rob himself is still sitting with his original position of 3.4 million shares with the 1.7 million units or whatever that came with that, and that are exercisable at 175. So is McEwen Mining. They still have their 345,000 or so warrants also, but they do not have a single share left. So what is going on here? Is there a difference of opinion between what Rob McEwen may think about how this isn't just maybe several million ounces down in the hinge zone, but this is like an entire Timmins scale district. We control all of it 100%, and there could not just be millions of ounces there, but tens of millions of ounces. The sort of stock that could go to $50 to $100 with its 50 million shares outstanding. It still has $18 million in the treasury, so it can carry on drilling for quite some time before it needs to raise more money. And there's the warrants that are in the money that could also bring in additional capital. Or is this something that's there's going to be something here, something there, but it's just not the same as the Timmins district or Kirkland Lake? I suspect, however, and the company has not really indicated what's going on, I suspect that the board basically overruled whatever Rob was thinking and said, we need to sell this. We're up a substantial, 400%, 500% in a 1 year period. McEwen Mining itself in August had $1 billion valuation, but its balance sheet is terrible. Its assets are mediocre at best. The Los Azules copper project doesn't seem to be going anywhere. It's still getting its 49% share of the San Jose cash flow, the mine that's a silver gold mine operated by Hochschild. But it's El Gallo project in Mexico. It's basically finished. The Black Fox project in Ontario has had all kinds of problems, and they've just commissioned the Gold Bar mine in Nevada, which is the only thing of any value that emerged from that entire McEwen mining Tonkin Springs play, where they merged all those companies together back in the early part of this century. And frankly, the Gold Bar should be renamed the Gold Paperclip. It's not going to be and add very much for the bottom line. So with a weak balance sheet, and who knows, maybe payroll issue, the board said, we're going to sell this stock now. And I'm only speculating here, but I suppose this was actually okay with Rob, because that cleans out all this fiduciary conflict of interest business. They make their own independent decision. We're going to sell this. We'll keep the warrants. We'll exercise those later and liquidate. You're on your own now. You can do whatever you want. And so Rob McEwen's now in a position of, being the largest shareholder in Great Bear. He has his own very deep pockets, much, much deeper than McEwen Mining, of which he is also the largest shareholder. So he's in a position to basically have a shot at redoing his success with Goldcorp. And if Great Bear does turn into this sort of a stock, because it only has 50 million shares fully diluted right now, it can get those double-digit price gains that have become quite rare in an age where companies tend to have hundreds of millions of shares out. And the public, it loves it when something like a Diamet goes from 60 cents and goes to $60. They love it when you get a stock going into 10, 20, 30, $40 plus. So Great Bear right now, it's continuing to do work. It's got a story that has basically switched from the hinge zone expansion drilling to delineating an entire district scale structurally controlled system that they hope is going to be something similar to the Timmins district. And that is, I think, the key story. McEwen Mining selling out its position is not at all what you might say a thumbs down. It is more likely a thing of necessity related to its own financial situation.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, Midland Exploration released the rest of the holes from its summer program at the Mithril Copper Project. Is the James Bay area play still stuck on the runway?
Unfortunately, Jim, the Mithril airplane is still grounded, waiting for a takeoff signal from the tower. The results were mainly from the northeastern extension of the IP survey. The earlier results they reported, they were all sort of infilling and trying to expand the sort of 1.2 kilometer segment that they had drilled from sort of March until May. And what came out of that was this scenario where, okay, this is a granodiorite country rock that has been invaded by both barren, later stage pegmatite dikes as well as granite dikes. And the granite dikes and the granodiorite are mineralized, and the high grade that got everybody so excited seems to be concentrated in the margins between the contact margins between the granite dikes and the granodiorite. And the problem with this is that when you do the averaging over the whole widths, you end up with grades 0.2%, 0.3% copper, which just isn't going to be good enough. And when you just focus on the higher grade the widths in that are just not good enough to support an underground mine with any sort of scale. So the hopes heading into the spring was beyond this first batch was that they would either find something parallel, which they failed to do. They found out that the second IP anomaly was actually caused by the magnetite or something in the conglomerates that was generating a false chargeability high. But it was also stepping to the northeast where the IP signature was fainter and therefore possibly not distorted by some other rocks underlying the target. But these holes are not much better than what we have before. So these results are quite a disappointment. However, they have done prospecting and, well beyond the initial footprint where they found all these high-grade boulders. They've now found an area to the northeast where they have a new boulder field, and this one's slightly different because instead of it being chalcopyrite, the copper mineralization is bornite. Now they are going back to drill with another 10 holes, but these holes are all sort of infilling into this sort of 2 to 3 kilometer segment where the results so far show there doesn't seem to be anything present which hangs together to create the sort of big copper discovery that would kick off a James Bay area play. Maybe they'll find something that, as they develop the target better to the northeast, they'll make this play go alive. But in that main area, not much seems to be happening to get liftoff for this story. Azimut Exploration, supposedly they were going to release results from their summer prospecting program on the Piqua project to the west. Well, I haven't seen anything yet. They put out a big update on the work being done on the Nunavik area farm out to Soquem, and that's all good and dandy. But what we really want to hear more about is what's going on to the west of the Mithril project. And frankly, I'm not surprised we're not hearing anything. I've bugged Jean-Marc Loulan about his website. It's caught in a time warp. None of the current projects that the company writes about it in its news releases are featured on the website. He says, we just need time to fix it. I think it's inexcusable that this company, which I think is one of the most serious players in the James Bay region of Quebec and beyond in the farther northern region, has such an outdated website. It's a sign of serious disrespect to shareholders that somebody cannot be paid some money to get all the stuff that they have in their presentations onto the website so that we can properly track their projects. We did, however, get some good news today for the James Bay area. The little junior that's basically hangs its hat in the Zim2 orphanage run by David Hodge, 92 Resources Corp. It was trading, 3-4 cents a few days ago, or about a week ago, and it started trending up. They'd reported, about a month ago that they'd seen chalcopyrite in the summer sampling program. Well, they finally reported the results for this program, and within the FCI West property, which sits immediately to the south of the Mithril area where Midland has been drilling, they have a 5-kilometer trend, which they now call the Maven Copper Trend, and they reported from about 4 or 5 locations outcrop, not just boulders, but outcrop, running up to 8% copper with gold and interesting silver values, and the mineralization is chalcopyrite, just as on the Mithril project, and it also has the a lack of pyrite. So you do not have that gossiness look, that rustiness that comes when pyrite is present, which helps guide prospectors to, these rocks need to be looked at. It's amphibolite hosted, which is a metamorphic rock of typical greenstone type belt. So it's different from the granodiorite that hosts the copper mineralization to the north on the Mithril project. They do not yet have any sort of model to explain what is going on. They do need to go in there and infill the spaces between these outcrops and get more samples so that we can see some sort of trend. But because this project was actually generated by Virginia Mines before it got absorbed by Osisko, there is old data available. There's an IP survey that was done. They've managed to get hold of the data and are reprocessing it with different parameters to see if they can see some sort of IP chargeability anomaly associated with this trend that could become the basis for a drill program in February when the ground is frozen and it's easier to get around. If this ends up being a strong target, it would be an irony because the joke making the rounds was that Andre Gaumond's team had visited the mithril showing that showed up in that government database, had managed to not find any of the surrounding boulders that Gino's team found last year when they ran around with their beep mats, but they did focus in on that FCY west target. They did record that there's some copper there, and there's also maybe 500 meters to the north a parallel trend where there are gold values, and they're still waiting for the sampling from that part of the property. But they decided to keep that, and it would be ironic if all this time later it turns out that the ground zero for this whatever it is that's going on with all this copper turns out to be in this FCI West project that 92 Resource Corp now has under 70% option, but was generated by the original Virginia Mines team that had managed to miss the mithril showing, which was supposed to become the basis for a great Canadian area play in the James Bay region.
We'll have more with John Kaiser right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, did anything new emerge from the Metals Investor Forum last week in Vancouver, where you were one of the presenters?
Well, the big story, which we already talked about today, was sort of Great Bear explaining to the audience what the new focus is, this 22-kilometer Destor Porcupine type break that could have all kinds of Timmins-style gold mineralization as opposed to Red Lake-style mineralization. I did find another company there that I really knew nothing about that looks very intriguing because I'm, of course, a big fan of undercover exploration, so I'm doing a little bit more research on that, but I think that's going to become a future Discovery Watch candidate. And Balmoral, which is one of our Discovery Watch companies and also a bottom fish recommendation that I've made, they did indicate that they are proceeding with a second follow-up drill program on that Area 52 property or target just to the south of Wallbridge's Fenelon project. They haven't yet put out any results, but today they did confirm that, yes, a second rig is on the way there, and they have provided some more detail about where they found visible gold. So that was kind of a clue that the Balmoral story is starting to take shape, and Darren Wagner was, pretty excited about what was unfolding over there. But the one other story that really caught my attention was West Haven Ventures. We talked about West Haven last year, about how they'd done all this prospecting south of the South Zone, where the goal is to find the South Zone vein system, which after about 500 meters of mineralization seems to have been faulted away, and everybody's been worried, well, did it get faulted sky high and get eroded away, or is it just the local horst block, and then if you step a little bit to the south, you'll pick it up again, and then you have lots of running room. Well, in their presentation on Friday, they had a couple of very interesting slides that were not part of the earlier presentations. One of them confirmed that hole 22 has been drilled about 100 meters to the south of hole 19, which ended up being on the wrong side of the fault and came up with nothing. And they have intersected what they call quartz breccia veins with banded adularia and ginguro. They have not said anything about the visible gold, because they don't want to play that game right now. But ginguro has almost always been associated with gold values. They intersected this about 350 meters deep. They are awaiting assays. If this runs any sort of decent gold, this will signal that they have picked up the veins to the south of the fault, that the fault was just the local displacement of a block of rock, and that with a lot more exploration, you should be able to chase this for another few kilometers. And they're now drilling what they call an uppercut hole, which is to hit this vein higher up to see what it looks like closer to surface, because they were basically probing, looking to see where do these veins continue. The other slide that they published was a result of their prospecting work and their geophysical survey. They revealed where they have all these low magnetic low trends, and sure enough, they are getting gold values showing up to the south, at the southeastern end of the property where there's a magnetic low trend, a bit farther to the south, when there's what you might call the southwestern portion of the property, and also to the northeast. So this project, as they do more and more detailed work, is absolutely exploding with potential, and they're even taking a fresh look at the sort of tower area, an alpine area where they had focused most of the work earlier, and are starting to understand how all these systems work. So the West Haven, I would say, was one of the, after Great Bear was probably the most talked about company at the Metals Investor Forum last weekend.
John, thank you so much for the update.
You're welcome, Jim.
I've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of Howe Street Media Incorporated.